Hey, welcome back. Today we're going to be talking about how to find capital for real estate investing. Are you investing in real estate but struggling to find capital to fund your deals? Well, in today's video, we're going to be looking at 5 different ways to get the cash for your deals, all the way from creative strategies to connecting with industry professionals to joint venture partners. We're going to cover it all in today's video and show you how to go from struggling to come up with the money for your deals to having all the money you need. All right, the first thing we're going to take a look at are creative financing solutions. So if you're tight for cash on deals, here's the good news. Some sellers are ready, willing, and able to do some creative type deals with you. So what can that look like? There's all sorts of different ways. Back in the day when I first got started with real estate investing, I did 18 deals in 18 months. A lot of them were with creative kind of seller financing or seller creative type deals. So one option is seller financing. Have the seller be the bank for you. So there are quite a few sellers out there that own their properties free and clear. They have no mortgages on them. In fact, the statistic I saw is that 1/3 of properties are mortgage free. So if you can find a seller who doesn't have a mortgage and who's not looking to get all of their cash up front, perhaps they want to defer their tax consequences, whatever it is, perhaps they're looking for a regular source of income instead of a big lump sum, perhaps they like the idea of getting some interest on their money and acting like the bank, whatever it is, there are some people that are open to the idea of financing their properties for you. Challenge is you're probably still going to have to come up with some money for the down payment. Every once in a while, you might luck out and get a 100% owner financing type deal, but those are few and far between. So another creative strategy is doing a lease option or a rent to own kind of a deal. So this is a way where you can do a deal with the property seller, the owner of the property right now, where instead of having to come up with a lot of money to buy it today, you can do a lease with an option to purchase and, if you want to, a right to sublet that property. So what does that mean? That means you get an option to purchase the property at a specific price, and you also have the right to rent it. So you're optioning it, you're going to be paying the owner some rent as you're going along. And if you get fancy pants about this, you can actually sub out that whole agreement and get an end tenant buyer in the property who's paying you rent, and then from that you pay the owner rent. And you hopefully there's a difference there, so you're making some profit there. And then they're agreeing to buy the property from you at a specific price at the end, which is higher than what you're agreeing to sell the property or buy the property from the seller at down the road. So you're making some profit there. So that is a lease option. And a third option there is buying a property, a creative way, is buying a property subject to the underlying financing. So what does that mean? Let's say the owner has the property, but he's still got a mortgage on that property. So he's not able to, owner finance the whole thing for you, but maybe they'll sell the property to you with the mortgage already included. So, for example, if the property doesn't have very much equity and the seller needs to get out of town quickly, this could be a good option, especially if they're thinking about just walking away and letting the bank take the property over for them. If you can find those kind of deals, then you can just step in, you can be making the payments to the bank, and you get the deed, the ownership of the property with the financing already included. Now, here's the challenge with this. The banks don't like this. The banks want you to qualify for the financing. But at the end of the day, banks are typically pretty slow moving. So as long as the payments are getting made, quite often they really don't care. All right, so you have to be a little careful with this. You have to understand the potential downsides, but the upsides are you can get into properties with very, very little money down. In fact, I can remember a couple of deals I did back in the day where I literally got into the property with $1 to make it a legally binding agreement. So that's another way to get in creatively. All right, the second way that you can find capital to buy real estate is the traditional way. You can go down to the bank, you can go to a mortgage broker, and you can get a traditional loan to purchase a property. This can be a residential mortgage on a single family home. It can be a commercial mortgage on a bigger property or a different kind of industrial type property. So you can just qualify for that. Depends on the kind of mortgage you're getting. If you're going for residential mortgages, then they're going to be taking a really, really close look at your personal ability to pay. What's your income? What's your debt to income ratio? These kind of things. They're going to be really taking a hard look at you. If you're getting a commercial mortgage, they're going to be taking a much harder look at the property. How profitable is the property? And that's going to determine how much they're going to be willing to loan you. And then they're going to be looking at you as a guarantor for that loan. But your personal income doesn't matter as much in those cases. So that's the second way to get money for buying your properties, is to go down the traditional route. That's what most people have done. That's what most people do. However, it typically does require for you to have really good credit and a lot of money for down payments. All right, the third way to find capital for real estate investing is by building up your relationships. Get out there, mix and mingle with professionals in the field. Who are the professionals in the field? Well, a realtor is a professional in the field. They know people. They're a good realtor is very, very well connected. Mortgage brokers, that's all they do day in, day out, is help people get financing for properties. And they tend to be a lot more creative than just going directly to the bank. All sorts of other industry professionals. I mean, just get connected with people. They can help you find the money that you need if you find a really good deal. All right, a fourth source of money for you to fund your real estate deals is hard money lenders. What are hard money lenders? These are professionals. They're not banks, but they kind of act like the bank, but they tend to be a lot more flexible. So they're kind of like a loan shark for real estate investors. Now, that's not a very flattering thing, but that's kind of the idea. They're willing to loan you money for your real estate deal. The collateral is the property itself, so they're not looking so hard at your personal financial situation. They're really looking at how much equity is in that property. If they have to come in and take that property over, can they quickly liquidate it and get all of their money out? So typically, they're not going to be loaning much more than 70% of the value of the property. And because they can get you their money very quickly and easily without all of the hoops and things like that you have to go through with the banks, they tend to charge much higher interest rates. But this is a great way for you to get into a property very, very quickly. Now, here's the cool thing. If you are an amazing negotiator and you're able to find properties at a steep, steep, steep discount, if you can get that deal under contract cheap enough, they very well may loan you 100% of your purchase price, as long as you've got enough cushion in there that they're comfortable that if they have to come after you and take over the property, they can get their money back quickly. So that's a way for you to get in with 100% OPM. It's just going to be very, very expensive money, that's all. And the fifth way is to find private money lenders or joint venture partners. Now, what's the difference between a private money lender and a hard money lender? Well, a hard money lender is a professional who loans out money. In my definition, a private money lender is an individual who's not a professional, but who is willing to loan you money for your real estate deal. So big difference there. So that could be in the case of a second mortgage or something like that. A joint venture partner, on the other hand, tends to be somebody who's a little bit more involved in the deal, and they tend to bring in the money and the credit in some cases to join forces with you to be co-owners on that property. So they're more like a partner instead of just an investor. But this is a great way for you to be able to grow your portfolio, to expand your reach, so to speak, without having to come out of pocket yourself for the down payments and renovation costs to do a deal. Go ahead and find a joint venture partner or a private money lender instead. Now, when it comes to private money lenders or joint venture partners, it's really important that you kind of lay the foundation properly and you get the word out to people about what you're up to with real estate investing. It reminds me of my clients, Bobby and Jenny Witten. These two had been investing in real estate for a number of years, very, very successfully, kind of under their own financial steam. And then recently they decided to take it much more seriously and start bringing on joint venture partners, because again, there's only so much that you can do on your own. Sooner or later, bam, you hit that wall, you run out of cash, you run out of credit, and you need to use other people's money. That's the situation these folks found themselves in. Now, here's the interesting thing. They had already kind of been talking a little bit about what they're up to with real estate investing with their friends and their family, but not really in an organized way. So they were kind of like a best kept secret. Now, when they got strategic about this, when they started doing what I call constant, consistent, edutaining communication, then people perked up. They started to pay attention. In fact, they had people reaching out to them going, geez, you guys, I didn't know that you were this active in real estate investing. This is really cool. I'd like to get in on the action as well. So they were very, very surprised that, they'd kind of mentioned it, but it hadn't really sunk in for people until they took a much more organized approach to raising capital. Since then, they've been raising lots of money and growing their portfolio with joint venture partners. You can do the same thing. All right, speaking of joint venture partners and other people's money, if you're looking for some, I got the solution for you. It's my book, Money Partner Formula. Kind of says it all in the title, doesn't it? Money Partner Formula. The perfect way for you to raise 6 figures in a matter of weeks and even 7 figures in a matter of months so that you can do bigger deals, better deals, scale your portfolio without having to come out of pocket yourself. So this is that whole game plan. This is the game changer that made all the difference for Bobby and Jenny that we were talking about there. And you can get a free copy. I'm going to put the link in the description below, or you can go to the website investorattractionbook.com and get your copy today.